here. Testing 1, 2, 3. Can you all hear me now? Let me know that you guys can hear me, and we'll try this one more time. Let me see. Okay, you guys can hear me now. I tell you what, if it's not one thing, it's another. So we'll try this again. I'm Christopher Inks with Texas West Capital. Good to have you all joining in. It's just after 11 a.m. Central Standard Time here on, see, now I'm going to mess it up, Friday, the 7th of February, 2025. Man, I'll tell you what, I have been struggling with the new year. I've been struggling usually with the month. You can ask anybody in the academy. I keep saying it wrong. And even sometimes posting the year, I'll still post 2024. So I'm still trying to make it happen here, guys. Oh, Lord have mercy. I hope y'all are doing better than I am this morning. Before we get going here, do me a really great favor, guys, and hit the thumbs up, hit the like, hit the subscribe, follow, share the link, leave a comment, all that great stuff, guys. Because we do go through them all, and you know, it's great. You know, it's great stuff. It's good to hear from you guys. It's good to know that, you know, that you guys are listening in and paying attention and maybe learning a little something. A lot of people come in here and it's different than what they think the market should be. And so they argue a lot, and, you know, it is what it is. You know, I'm not here to tell you I'm going to be right 100% of the time. Nobody's going to be right 100% of the time, especially in the markets, guys, which is why risk management is so important, right? I talk about it day in, day out, ad nauseum, hoping that it sticks in spite of your best efforts to fight it. The only thing you control in the market is how much you lose. Okay, that's it. You do not control where the price goes or how far it goes or where it doesn't. None of that. Okay, the only thing you control is how much you lose if it goes different than what you expect. So that leads me to something else. So earlier this morning, I posted a comment, or I guess a tweet or a post or whatever the hell they're called these days. They're on Twitter. I don't know if I'll ever remember to call it X, but it's Twitter, right? And basically, what I said was retail traders tend to focus on the possible reward of a trade rather than their risk associated with it. And that contributes greatly to their losses. That's real talk, guys. That is real talk when it comes to trading. We come in, I've said this before, when you first come into trading, you have a certain idea in your head about how you think market works, about how you think it should work or things should go right. And most of this is based on your desire to get rich quick, okay? Guess what, guys? Same way with me when I first started. Okay, 30 years ago, going on 31 years ago, I was the same exact way. The thing I found over the last 30, going on 31 years, is that pretty much everything about the way you think the market and trading is when you first join the markets, when you first start out, is 180 degrees different than the way it actually is. It's actually the complete opposite. All right. So one of those things is that, think about what I'm about to say here, guys. When you're trading, you generally tend to think about those profits, right? You generally tend to think, how much money can I make? And worse, you don't think about your risk reward ratio, right? You're just thinking about how many absolute dollars can I make? And in your head, you've already got it spent. Man, if I make that, then I can do this, 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 and this. And the more wild that potential target is, crazy it is, bigger it is, the more wild your thoughts go, what you can spend it on, right? Life-changing. The problem is you're focusing on the wrong thing. Okay? Trading is a game of losing. Get it through your heads. Trading is a game of losing. It is inevitable that you will lose from time to time. And the kicker is, the newer you are, the more money you're going to lose and the more often you're going to lose it. Okay? So if that's the case, and it is, I'm going to tell you right now it is. I didn't make this up. I'm not just saying this is the way. I'm telling you, this is the way it is, guys. So if that's the way it is, then it behooves you to actually figure out how to minimize your risk, right? Does that make sense? Yes, just like Bamboo says, the better loser wins. The best loser wins. Yes, exactly. And that doesn't mean that you're going to lose constantly. What that means is, though, is that it is a game of losing, and you will inevitably lose. As much as you don't want to, you will lose, which means you have to get comfortable with the idea of losing, but not just losing to lose for losing's sake, right? You want to make sure that when you do lose, that you don't lose like this crazy amount. Most of you, if you're not consistently profitable right now, you've probably in the past and maybe even more recently have lost 30, 50% more in one trade. You got liquidated or something, right? Yeah. Don't do that. You shouldn't be doing that. I hear people all the time talk about, well, I traded so that my liquidation is my stop loss. Don't do that. Don't do that, because your liquidation could end up being a lot lower than where you plan that liquidation to be due to liquidity issues. Right? Don't do that. Listen, before we get into these charts here, guys, and we talk about news and stuff like that, you need to understand that at the end of the day, you are an adult in an adult marketplace, which means there are no, it's somebody else's fault. Part of being an adult is accountability. It's taking responsibility for the actions you take. And it's not just the actions you're taking this minute, but the actions you've taken in the past that have led you up to this point. Right? I always give people, they talk about, when I talk about responsibility and personal responsibility like this, I always have people come up, oh yeah, well, he was the one that did this to me. Okay, sure. He has responsibility in the actions he took against you. You have responsibility in making the decisions that you've made that got you to that point that allowed him to do that. Think about what I just said. You have absolute responsibility in the decisions that you've made that have led up to the situation you're in. The reason it's important to understand that is because if you accept that you are at fault, that you do have a responsibility, right? You don't have the responsibility of what they did, but you have the responsibility of, one, getting to that point, and or two, allowing them to do it. The decisions you make allowed them to do that to you, okay? The reason why it's important to take on this responsibility that you do have, that part of the responsibility that is yours, is because once you do that, and only then, can you look and go, okay, what can I change so that this does not happen again? You see where I'm going with this? This is life, guys. This isn't just trading. This is life. But in trading, what that means is now you go back to say, what decisions did I make that got me to this point where I got liquidated here? I wasn't using proper risk management. My emotions got in. I got too excited. I didn't take profits where I was supposed to because I thought it was going to go up. My emotions were there. And you see, if you can't admit that you made these mistakes, you can't possibly change the decisions that you made in the future for these same things, right? You're gonna repeat the same things over and over again. Think about people in your life, because most of us, we're awful to think of it ourselves, right? Where we've made the same mistakes over and over again. But it's pretty easy if we think about our friends and acquaintances that we know, who we see are stuck in a cycle. Maybe ladies, maybe it's one of your girlfriends, right? And they keep bringing in the worst guys, right? He's going to jail. He's not paying child support. He's on drugs, right? Oh my God. The common denominator is you. You keep choosing this type of guy. You see what I'm saying? Yes, they have the responsibility for their actions, but you have the responsibility that you keep choosing. And until you accept it, you can't go back and change your choices, start changing your choices so you don't keep coming up with that, right? It's the same thing in trading. If you're honest with yourself, and this is why trading journals are so great, is because they will show you, if you're honest in them, they'll show you where you're making the same mistakes over and over and over again. Does that make sense? And so sometimes people kind of shrug this off. They're like, all this mumbo jumbo, whatever. Just tell me where to trade. You're missing the point. I can tell you where to trade all day long, but until you figure this part out, you're going to consistently miss it. You might get it once or twice, but most of the time, your emotions are going to get in, your psychology is going to get in there, and you're going to screw up. You're not going to take profits where you should. You're not going to use the proper risk management. You're not going to listen to these. You're going to do these things over. And then you're going to sit there and you go, oh, well, it's your fault that I didn't make money. Well, no, it was your fault. It was your fault for not doing the things you needed to do. Do you guys understand that? It's like I know your sister, JoJo. But seriously, you know, this is the reality. And this is why I tell you guys, everything I teach you about trading is absolutely applicable in all other areas of your life when it comes to the emotional, psychological side to it, the ideas of success, of learning, of getting better, all these things. This trading isn't some special little thing which has its own little stuff that you have to learn. The skills that you learn to deal with all that I'm talking about here are transferable to every other area of your life. Absolutely 100%. Let me see here. What'd you say there? I got a comment here. Let me see. What'd you say? Ken the Sailor Watts. What's up, man? Just sailing, huh? Man, I don't know if I'd ever be a sailor, but man, I'm definitely I got a lot of respect for those that do. Would you say more people need to listen to you in your analysis? They can save themselves. Personally, I'm retired and have professional wealth managers manage 85% of our suitors. Yeah. You know, anybody can get out here and tell you guys, listen, this is how you do. And you have to learn how to use a strategy or a technique or whatever, right? You have to learn proper risk management. But you can learn those things all day long. And if you don't get this other part down, it makes no difference that you know that stuff. It makes absolutely no difference because you will violate the rules and the guidelines and the risk management time and time and time and time again. You are like that, you know, unfortunately, like that woman that keeps getting the loser guys. You know, you are that woman in trading. You know, and ladies, I'm not picking on you with that. I think you understand that. But, you know, I say it because it's a very valid thing, right? If you look online, if you talk to your friends, whatever, you know, often girls will have this same kind of, oh, you know, God, I get this guy and he did this and this guy and he did that and this guy did that. And you just kind of want to stop and say, well, but the common denominator is you're making the choices for these guys, you know, to choose these guys. So you have to figure out what's going on in you that you can change as far as your decision-making goes so that you don't keep choosing those guys. Because those guys are going to do what they're going to do, clearly. They're clearly going to do it, regardless if with you or somebody else, right? It's the same thing with trading, okay? The trades are going to do what the trades are going to do regardless. So you got to figure out, well, how do I keep making the same mistakes that I'm making that I have control over? Does that make sense? No, there's no Fibbo today. He was here last week. So he'll probably be here next week. He usually tries to be on every other week. I know he was going to be out of town this week. Let me see here. So yeah, so anyway, this is it, guys. This is the reality. This is trading, right? And so if you're following somebody online, to go back to what we started talking about here, if you're following somebody on, excuse me, hiccups, somebody online, and they constantly talk about profit, they constantly talk about how much money you can make, constantly talk about this, but they give very little or no talk about risk management, be very wary of people like that because they haven't figured it out yet. Or they're just trying to sell you something and they're telling you what you want to hear, which is profit, 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 profit. How much money can you make? What dollars can you make? Right? You know, I always say it. I don't tell you guys what you want to hear. I tell you what I believe that you need to hear. Because if you're here and you want to be serious about trading, there are certain things that you have to accept, certain realities, certain truths. And if I don't tell you what they are, then you really don't have a clue. And you come in thinking you want to do this trading thing without realizing what it really entails. That's not a good decision. Okay. Seth says, my wife keeps buying candy and wonders why our kids have cavities. But anyway, yeah, Chris giving trading and relationship advice. But seriously, guys, these things I talk about are applicable in every other area of your life. So if they need to be understood for trading and to be successful as a trader, maybe you should probably apply them to other areas of your life as well, right? Because it's the same thing. Relationships, job, business, skills that you want to learn, all these things. Okay. Let me see here. So yeah. Oh man, Chris, and I love the name, of course, but we love having you following along, man. We love having you follow along. We try to, keep all the hype out of it and all the blowing smoke up your rear end, and just try to keep it 100 with you. No cap, right? I don't know. What did the kids say today? I said no cap. I don't even know what that means. But anyway, yeah. So that's the reality. That's the situation. That's what's up, guys. And if you don't understand that, or you refuse to learn that, the rest of what I'm going to go into for the rest of this session here is not going to make any difference at all. The reality of it is, somebody can tell you all day long where you need to enter, where you need to exit, and all these things. But because you don't get the inside of you fixed, because you don't get the inside of you right, because you don't do those things that are required, right? It doesn't matter that they give you all these. You will never do them exactly as you should be. So work on yourself, right? Work on making sure that you're being the best version of you that you can be. Learn to, understand that we tend to follow our emotions. Most people tend to be led by their emotions. And ladies, this is especially true for you, because women are much more emotional than men. Men can be very emotional, don't get me wrong, but I'm just saying women in general tend to be very emotional across the board, right? And so if you're in trading, what that means is you have to be especially cognizant of those emotions. You have to figure out how to understand when the emotions are coming and the changes that are happening to you when they happen. And you have to have a plan in place of how to deal with them, right? So it doesn't affect your trading. But look what I just said. You have to have a plan on how to deal with it. You have to be able to understand when they're happening and then have a plan to deal with them before they do, right? Think about that. It's every other area of your life too. It's relationships, jobs, all that other stuff. This is life. This is the realities. This is what everybody else is going to teach you. Why? Because you don't want to hear this. You want to hear all the, you're going to be rich tomorrow. I'll show you how to turn $10 into 10 billion next week, right? That's what everybody wants to hear. That's why you guys go and throw all that money to all the nonsense. Now, would I love for you to join us at Texas West Capital? I would absolutely love it. I think it would be amazing. I think you would get so much insight, not just in trading, but if you really pay attention in life, okay? And you can do so at texaswestcapital.com. All right. By the way, right now we've been doing for the past few months this $97 a month all access pass. That's about to go up a bit. So if you're already in there paying the $97 a month before the price goes up, you're grandfathered in. You just got to make sure that you keep renewing at that because the system will kick you and then you'll have to come back in at the higher price if you don't, right? But if you're interested, even checking us out for a month, it would be good to do it, probably this weekend to at least lock it in at $97 for a month. And if it doesn't resonate with you, a month it is, right? If it does resonate with you, well, guess what? You're paying less than what you would have to. So I just want to kind of give that heads up there. Check my DMs after the call, please. Yeah, okay, Bernardo, I'll check them here in a bit. Yeah. Can I do a larger weekly time frame Bitcoin snapshot of your plan for both sides of the market? Well, see, now here's the thing. Bull and bear case would mean I'd have to have a bear case. I really don't have a bear case because nothing's going on that suggests the top is in. Now, I can give you some downside targets if prices to break down a bit. I can do that. I always do that, right? But they in no case would be a bear case, right? The price has to move quite a bit lower from where we're at now to even suggest a bear market may be in. Even like I said, even if it was to drop down there to 80,000 or whatever, we'd still be in a bull market, right? But everybody be screaming, "Oh my God, bear market!" But yeah, I can do that. I plan on doing that today, as a matter of fact, as well. So let me see here. Let me see here. Always take your profit. What'd you say here? Always take profit where your targets are. Don't push up your targets. I can't even say it. Example, clean spark call option yesterday. Took it off at 12 this morning. It went to 1240. Now it's 1165. That's right. Have a plan and play your plan, right? When you deviate from your plan, that usually indicates emotions are coming in. You don't want to be emotional in trading. Emotions will lose you money, guys, in the markets, okay? Let me see here. Okay, so let's go ahead and jump in here. Let's look locally here at Bitcoin. Where are we at with Bitcoin locally here, okay? And then we'll kind of zoom out. Let me pull this up here for y'all. Boom, there we go. Everything else aside, it looks like we've got a descending wedge, and we had an impulsive breakout and close above it on the 1 hour and actually on the 4 hour as well. Rallied up into the hourly pivot. That's that blue pivot right there. And then pulled back, and so far is just testing the descending wedge resistance as support. Now, that doesn't mean it has to stop there. I'm just saying right now that's where we're at. Okay? That's where we're at right now. Now, I'm I've been looking at this as a 1, and then ABC is W. Well, I'm sorry. AB. Oh. Let me look at the chart here to see where I had. Sorry, guys. Make sure here. Okay. That's what it is there. Oh, you know what? Did that one break up higher? Let me see. This is a different chart here. 99, 168.37. 99, 062. Okay, no, it didn't go up higher. Okay. Yeah, so I'll look at this as an ABC as a W, and then an X, and then an ABC as a Y. So this swing high here is only 99, 169.54. Oh, nope, that did break out a little bit higher. Damn. All right. So on my chart that I was looking at, which was the Binance Bitcoin USDT chart, this one was slightly higher than this one here. So we could probably look at this as a flat. So we look at, move down here, move up, and then ABC, and then 1, 2, 3, 4, 5 is a flat here. Finish it out. But nonetheless, the idea is we're getting above this area here. So if this is going to be a 1 and a 2, then, breaking out through this area locks that in as 3 waves down. And so the idea is that we should rally and break out higher. But we still need to break out higher. At this point, what we need is a 1 hour candle close above this morning swing high. If we can get that, it should likely indicate that this low is in here and we're heading up. Okay? So the first thing we're going to look at is, do we hold support here? If we're holding support here at this descending resistance and we're rallying, breaking back out, that's really good. That's what you want to see to send that higher. You can see that the 1 hour stochastic RSI is almost reset down here and oversold. 15-minute is reset down here. We're just pulling back to the 15-minute pivot here. So this might be like an A, a B, and then maybe like a 1, 2. Well, I guess that could be maybe like a W, X, and then ABC as a Y here or something like that. So we're going to have to wait and see what happens here. Does this hold, and do we break back out? We would want to break out above this swing high at 99, 249.42 to signal that we're probably going to break out above this swing high. And if we break out above this swing high this morning, by the way, this is the Bitcoin all-time index chart here, okay? So we break out above that 100, 184 and 13 cents here. Should indicate that that low is in, right? Off this rally here, we've pulled back almost 70.5%. We're right here at the low volume node. Generally speaking, we expect to, like we did here, catch a bid and rally back up out of that. Okay, so that's usually the first thing I look for when you're coming down to or rallying up into a low volume node, is I look for a rejection at that low volume node. All right, because the interest is not, the market is not really interested there. It shows you on this chart, all these prices on this chart, right? All the volume, least interested right here around that 97,000 area, low volume node, right? Let's kind of zoom out here a bit. Everybody freaking out, but the reality of it is we had a 17.75% pullback here, 16.5%, not quite 16.5% pullback here. We had a, from the swing high here to swing low here over that 7 months or whatever, we had a 33% pullback. Here, we had about a 21% pullback. Here, we had a 20% and a 21.75% pullback here. Y'all are freaking out over a very insignificant pullback. Now, I get it. People are in alts and they're all upset because their alts are down. Well, okay, so remember what I was talking about earlier about personal responsibility and the choices you make. You are an adult in an adult market. You don't get to blame anybody else for the decisions that you make, which is why you have to understand what you're doing. Don't just come in and just throw money in the market and hope you make money. Trading is simple, but it's not easy. And it's not easy because you have to deal with the emotions that you have, with the psychology of what's going on inside you. That's what makes trading so damn difficult. Trading is really simple. If you zoom out like this, I'm going to go ahead and get rid of these now here. But I mean, just look at the price action. It's pretty damn simple. You're going between previous areas of support and resistance, basically, right? I mean, look at this. That's pretty damn simple, right? It's pretty damn simple, right? I mean, you know, you see her keep doing this. Pretty damn simple, right? It's not, trading is not complex. It's simple, but it's not easy. Does that make sense? It's not easy because we don't in our lives really understand that we're supposed to control our emotions, or much less how to control them, right? If you're coming into trading and saying, man, I can't wait to get good enough at trading where my emotions don't happen, well, that's never going to happen. You're a human being. Unless you're a sociopath, your emotions are going to be there. So what you have left then is to start paying attention to what triggers them and how they start manifesting themselves so that you can notice when that's happening and have a plan already put together about how you're going to deal with them. That's what you have to do. That's what trading's about. Okay? So when we're looking at this, the weekly pivot is right here. Looks right here around. We could see a pullback to 80,000. Generally speaking, we moved in sideways between the pivot and the R1 pivot. We're just ranging right here. We could, you know, generically, when you have this setup, price does this usually. If it's bullish, it can pull back to the pivot and then break out higher, or it'll run up to the R1 pivot, pull back to this previous area here, and then go higher, or it'll just break out. Those are the three ways that price action happens in this particular scenario here, in this particular model, okay? If it's not bullish, then you will expect it to drop down through the pivot and head to the S1 pivot. So when we simplify this and we step out to the macro here and we look at the at the weekly, that's a possibility. But a pullback to this pivot down here is not bearish at all. In the macro sense here, and what we're doing, it's not bearish at all. It's still part of this overall bullish structure, right? I mean, if we're looking at major swings along the way here, yeah, you're looking at this and this, this, and this, and this. Whoops. And up here where we are. So if you want to be bearish, you're going to have to wait for a weekly close below this area down here. Then you can start to think bearishly on the macro. Okay? That swing low is 49,000. On this chart is 49,217. But this is the structure. Okay? It's just trading is simple. It's not easy. This is your structure. And until, on the macro sense, until you're getting a breakdown below here from where we're at, still bullish market structure. When you're looking at the large swings, right? Locally, let me get rid of that now. All right, let me kind of pull this back in here, a little bit lower time frames here. Now we can zoom out a bit. Now, to keep this really simple, all I'm looking at is for a daily candle close above this swing high. Why not the pivot? Because it kind of peaked out above the pivot here and pulled back. So I want it above this swing high right here. If I can get a daily candle close above that, and if it can be impulsive, okay, which means largest candle spread, spike of volume through that, even better. But if I can get a candle close above that on this chart, that's 102,514.71, I'm going to feel pretty good about this low likely being in. And this low would likely be in as well. Right? Now, if you want confirmation that this low is in, we got like a 1 and a 2 here. You actually need a breakout right up here, I think right around this one, right around 106,466.5. Do that. Get through this one, whatever like that, off to the races. Overall, we should be, okay? Now, let me kind of throw this range on here that I'm looking at the moment. All right. Now, if we were to close below this swing low, this is 89,224.11. If we were to close below that low, what happens? Well, now we have a low volume node here. So my first thought is I'm looking down toward this green demand structure right here. Okay. So right there around 86,000, 86,100. Well, 86,100, 86,300, I guess, something like that. No. Let me see where that's at here. All right, so about 85,100 to 86,100. It's about $1,000 range right there. If we close below that low, or even if we wick on down that, I think we'd probably see a wick on down into this area here. Now, if we close below that, then we're looking at that weekly pivot down here at 80,000. That's as simple as I make it right there. At the end of the day, regardless of what you look at the smaller time frames, that's the big outlook right there. If you're below there, then it's that one, and below that one gives you that one. As simple as that. But if we break out above, close above that red line there, that should indicate the low's in, and we're going to break out to new all-time highs. Okay? But yeah, so this, again, this low volume node is significant in here. Don't listen to people like, oh, we're going to go way down here to 70,000 or something. I mean, could we? Sure. Anything can happen at any time, guys. Okay? Absolutely anything's possible. Remember what I said at the beginning. You have no control over where and how price goes. All you have control over is how much you lose if it goes against you. All you control is how much you lose, right? Proper risk management. But for anybody out there screaming, oh my God, 70,000 is coming, blah, 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 you haven't even made it through the low volume node here yet, or this secondary low volume node right there below it. And the low volume nodes tend to work as support or resistance until they don't, which means you should always expect them to work, at least with your initial move into them or your initial few moves into them, as support or resistance. Now, whether they continue to hold as such or not is another story. But when they break down through it, usually it's a strong push through it, like what we have right here, right? So look what I mean. You see the swing highs here? All of this right here, as we're getting into this little bit of a low volume node here, when it look at all that time over months, right? Keeps getting rejected. Finally, it breaks out and runs right up through it. If we were to break down through here, the odds are most likely that we're going to bounce here once at least, maybe a few times before it finally just goes through the same way it went up. Now, it can just push straight down through it, but rarely does that happen. Most of the time, significantly, most of the time, you're going to get some bouncing off it or prior to it before you push through it. So don't get ahead of yourselves with $70,000 targets. Anything's possible, but what's most likely at the moment? That's what you should be trading. What about a possibility of a rally to 122 to 127, then a pullback to 92.95 or even 83.86? Is that something you're looking at? Well, my initial thought is if we're popping up to 120, 125, 130 in that area, I'm highly doubtful that we're going to break down below this range here because we're creating a base right now. Right? So if we're popping out above it, worst case scenario is that we should pull back to it. We shouldn't really think that we're going to push down through it. Now, it's not that it can't. But again, we want to think firstly always in what is most likely to happen. What is more probable to happen than not. That's the way we approach it, right? So if we were to look here, we go, okay, let's say this is a 1 and a 2 right here, right? One and a 2. This would give us minimum expected 5 waves up right here to 136,447. If this is a 1 and a 2, wave 3 minimum expected at 126,395, wave 5 at 136,447. Now, these are guidelines. Price does not have to get exactly there. But if your wave 3 is going up here and you're not hitting the 1618 at least, I would say it's probably an interior of this larger wave 3, which means you're going to overextend higher. But if we just throw, let's just say we were to throw a quick count on here, right? So basically it would be a 1, 2, 3. Let me see here. Try this again. 1, 2, there we go. 3, 4. 1, 2, 3, 4. We're working on this 5 up here, right? But it looks like this 5 may be overextending. Let's do something like that, right? And so, we're possibly looking at a, a bit of a, maybe a 1, 2, 3 in this area here, maybe some sort of complex correction. 4. And we're getting this 5. Let me see here. Oops. And so maybe we're looking at a 5 right there, right? Or actually up there higher. But if we get this, we start pulling back, right? This wave 4 here. I mean, that 38.2 is right there around that 92,500 area. All right. So, again, if we're looking at this, actually what I think I have, it might be something more like this, I think. Yeah, I think this is what I have as my count. I don't remember off the top of my head, but something like this here. All right. So what this gets you then is we're still working on this larger degree wave 3 here. Pullback is actually right there. Again, 38.2 is right about mid-range of our base here at 94,803 if we're pulling up there, right? And then, of course, pattern-based target off that, get you maybe up here to 171. Though probably you're going to see, more subdivisions as we get this kind of blow off top type thing, especially because we didn't have it last time. And so we could see this definitely, continue up much higher in there. Okay. So, just a quick outline here. This is kind of the overall path I'm looking at. So again, if we're breaking out higher here, I'm looking at this as a 1-2 right now, which means 5 waves up around 136, almost 136 and a half. 38.2 pullback gets us around 94.8, but we don't have to get a 32 pullback. We could potentially just pull back right here to the top at around 105. But pulling back into this range isn't a terrible thing because these ranges, once you break out, they're bases, right? These become bases. So like this was a base here. We built out, we pulled back to that base resistance, right? Took off. So big picture, okay? Always don't sit here and get all caught up in the emotions and whatnot that's going on with crypto Twitter or whatever social media platform you happen to be around. Most of your big accounts are just like you. They may have more terminology. They may know the patterns a little more and whatnot, what a triangle and stuff like that. Most of the time, they're really bad on putting those out there, but I've pointed that out many times before. But just because somebody's got a big following and they use terminology that you don't know does not mean that they're qualified enough to be somebody worth watching and listening to. Okay. So, the goal is not to tell you not to listen to everybody. It's just the goal is to help you be a better consumer of the information that you're finding out there. I'm going to tell you, I can't even imagine. Again, I started 1994. So before the internet, before AOL's, dial up, all access, 20, whatever it was, $21 a month or whatever, all that kind of stuff. I was before that when I started trading. I can't imagine coming out today with the wealth of information that's out there and trying to figure out what's correct and what's not. Because I'm going to tell you what, most of your free information online is a half truth or an outright lie when it comes to trading. A lot of it is a lot of worn out old nonsense that wasn't correct back in the day when I first came in, and it's certainly not correct today. But it permeates all over online because it's easy just to copy paste. It's easy to copy and paste. So you guys, you have to be better consumers of the information that you're finding, especially if that information is free or pretty close to free. Right? Does that make sense? Not to make you sound old, Chris, but the year that you started trading is the year that I was born. Troy, it's all right, man. I feel good about my age. I turned 50 in November, and I don't feel 50. I'm gonna tell you guys, listen, Troy, you're young. You probably think, man, 50's old. I remember being that age once. The cool thing is when you get here and you don't feel, you're like, man, I still feel like I'm in my 30s, my young 30s, but with a lot more experience and a lot more knowledge now, a lot more confidence, right? The confidence is stuff you really don't have a lot of times when you're young because you haven't been through enough, right? Yeah, no worries, man. I don't feel old. I love it. I love my age. Chris was reading the tape. No. That was Peter Brandt. He's got I've got 30 going on 31 years. I think he's got about 50 years on this. So he's got a little bit more than me. But anyway, yeah. So, so again, when it comes to Bitcoin, step out a little bit, look at this right here. So in this range, we've got great price action volume through the low of the range, right? We've got volume dropping off. We've got this what appears to be a spring here with this great doji candle, large lower wick. We got a spike of volume that came with that. Everything's screaming reaccumulation here and a spring here, right? And we rallied up, and then we got rejected on some high volume here at the top, right? Some of the significant volume, much more than even at our spring down here. But not as much as our initial, what would be the selling climax or automatic reaction over here. Less volume up here. But look what happened. It took for price to drop here 16, a little bit over 16%. It took 14 days, 2 weeks. It wasn't a strong push down. It was just volume came out there, right? We came down, and then we had volume right here on this. I got to zoom this in a bit for you guys. You're probably like, what the hell is he pointing at? Then you had some volume at this doji right here, and it went up a little bit higher. Then it came down again. And what happens here? Another large lower wick, small body at the top, large spike of volume, and you rally back up again, right? I mean, this is all showing us demand is here. Then you get some moves down on some volume. Not really much volume there. But oh my God, look what happens right here. This was that Monday. Large lower wick, bullish engulfing candle body there. Extreme volume. And look at the volume. 44.82K versus 45.33. So just slightly less volume than what we had up here. But we're having a whole nother thing. We're having large lower wick here. So even though supply still came in here, demand kept showing up here, here, and oh my God, especially here. So right now, as long as this candle's holding its support here at the low, with all this volume, that's what's in control. And so, if we're breaking out above that candle, we should be thinking that we're likely to head out to a new all-time high. If we were to especially close below this candle, that wouldn't be so good. And then at that point, we'd be looking for potentially a move to the green area here or even the weekly pivot down here. So again, we zoom in more locally. We're looking for a daily close above the pivot, but really above that swing high, that 102.514.71 here on this chart. Whatever that same candle is on your chart, whatever you're looking at, whether it's a USD Bitcoin pair or USDT pair on whatever exchange you're looking at. This on mine, it's Monday, February 3rd. That's the candle. You want to be above that swing. You want a daily close above that. And then you should be thinking new all-time highs coming in. Does that make sense, guys? Any hope for our alts? Guess this time is different. Most blue chips did better in bear market than Bitcoin at 100,000. Ha. That's a good question, Chris. And lucky for you, I was going to talk about it. So let's talk about it. Others. Okay. I believe that we are very likely bottomed here. So others are your altcoins outside the top 10. So it's basically the shit stuff out there, right? And I believe what we have here is a W, and then X is a triangle, and a Y down here. We're getting a great lower wick, dipping just below the range EQ here. And this is today. So we'll have until Sunday, but we already have the stochastic RSI on the weekly resetting into oversold. What I'm looking for on others is a weekly candle close above the weekly pivot here at about 313.92 billion. If we can get that, that's going to suggest the low is likely in. Breaking out above triangle resistance here at 368.62 billion. Adds confidence to the count. Wave 3 has a target of 1.28 trillion on that. Okay. You'll notice here, we're going to throw Bitcoin on here. See if we get this here. You'll notice Bitcoin Broke out here and broke out, right? Above that previous swing high area here. We have not yet with alts. So alts haven't broken out yet. They should. So, again, people are freaking out and people are all upset here because we've had this move down since December, right? But let's look at some reality here. Prior to this pullback, we had rallied up almost 200%. Now we're pulling back about 51%. That's it. 50% after rallying 200%. See, this is where when you learn things like Elliott wave, it gives you an understanding, even if you don't chart it correctly sometimes, because you're going to get it wrong sometimes. But it gives you an understanding of structure and this idea that, oh my God, a 50% pullback isn't terrible. Oh my God, alts are pulling back 78 to 80%. Well, you're talking about off the high, but that may only be 50% off of the overall rally, right? Or not even 50%, whatever, 25, 30% of the overall rally, right? You have to keep everything in context. Don't get caught up in what's happening minute to minute. And if you bought up here and you're upset that it's down here and you're holding, guess what? There's only one person you can blame for that. You. You probably bought up here because you were all excited and euphoric and whatnot. It's not when you buy. And you didn't know what was going on. You didn't know what's happening. You thought, man, I want to buy here because it's going to break out here and it's just going to fly up and I'm going to be so rich. Right? That didn't happen. And so now you're all down in the dumps and upset and pissy because it's pulled back here. Maybe you're still holding, in which case you just have to hold a bit longer and you'll probably get your money back and then some. But a lot of people waited till it got down here and then sold near the bottom. That's what usually happens. And now you're upset twice. You're upset because you bought at the top, it came back the issue, and then you're upset you sold around the bottom as it goes up higher. Does that make sense? Chris, I'm actually going to post the other chart, with some other thoughts, some additional thoughts in it later today. So you guys will have that there, those of you that are in the academy. All right, guys? So again, the thing about trading, the difficult thing about trading is your emotions. And, people will get in and day out. And they'll get in just because they can get in, right? But they have no clue what they're doing. And so I guess my thought is, would you play rugby, Australian rules football, right? Or would you play even American football? If you didn't know what it was or what the rules were, would you just go jump in there and play with professional 300, 400-pound athletes that know what they're doing? They know the rules, that are strength and conditioning is in there. You wouldn't, right? I mean, it would be completely stupid, right? But yet people jump into the market the same way every day. Just because they get it, they go, I can get in, I can make money. But they don't know how to play. They don't understand what the rules are. They don't understand how and price moves the way it, how and why price moves the way it does. They don't understand how to read that and how to forecast from that. They don't understand much. They don't recognize that they need risk management, much less actually learn proper risk management. Does that make sense? And again, I say this not to make you feel bad if this is you, because it's probably most of y'all. But I say it because it needs to be said, and hopefully it triggers something and you go, oh crap, yeah, no, I don't need to be doing what I've been doing. I need to learn how to do it. So, obviously I think we have the best way to learn, because I don't just say, listen, this magical system is going to make you rich. No, break everything down for you, and I reinforce constantly about proper risk management, how to apply it, how to read the market, why the market moves the way it does. And I show you all the time, 3 live streams every week. We do this, right? And then, of course, there's everything else. So the goal there is to get you to learn how and why the market moves like it does, how to read that, how to understand it, how to forecast based on it. Learning Elliott wave and Wyckoff and price action, these are just tools that you can use along the way. But me teaching them helps you understand how they all actually come together. How, even though they're different strategies, how the targets all come together the same way. How to understand, they help you understand that price action. And then all of a sudden, when you're in a range, you don't start freaking out. You start going, well, okay, so this is a range. What's that price action and volume doing? What does that probably mean? What should I be looking at here? Right? And the whole reason we do that is because the reason you FOMO or the reason you sell on FUD is because you're scared. And the only reason you're scared is because you don't know what's going on. So the more you understand about markets and what's actually potentially going on, the less fearful you are. And the less fearful you are, the much less likely you are to FOMO in or to get out on FUD. And the much more likely you are to actually get in before the move happens. You see the setup occurring. You don't try to jump into it after it's already happened. You're like, woohoo, it's already up 100, 200%. I need to jump in now, right? That should be your goal, is not to do that. It should be to be in before it goes. That's always the goal. TWC is the best way. I appreciate that. One of our newer students, and they show up to the weekly sessions that we have. We do 3 sessions every week on Monday, Wednesday, and Thursday. Wyckoff on Monday, price action on Wednesday, and Elliott wave on Thursdays. We talk about those specific things in there, but we also show you how they overlap with the other ones during those as well. So you can start putting pieces together. But that isn't even just enough, right? It's not enough to know how to use something. Then you have to go, okay, so now I know, for instance, what Elliott wave is, and I know how to count waves, but how do I enter? And we talk about that constantly with each of those things, right? Here's the model. Here's the entry model. This is what you're looking for. This is the rules. And this is why. This is the way you should be approaching trading, guys. If you're approaching it any way else, there's no wonder that you're losing money, right? And the goal, if you're in the market, is to make money, not lose it. And a lot of time, I'm going to say something here that you're not going to like, it's getting rid of the attitude that you may have. It's getting rid of that, that bit of pompousness, right? It's being more, it's understanding that maybe you don't know what you think you know. It's a hard thing for people to do. It's a hard thing for traders to do. It's a hard thing for human beings to do in general, right? Is to admit that they may be wrong. We're awful at that. We can't possibly be wrong. It's got to be somebody else, right? Let me see here. So yeah, so looking for this movement back up. All right. So generally speaking, alts look like the worst is behind them. And if you think about it, the sentiment that's out there right now about alts is absolutely awful. It was below the sewer. Usually that's when things start flipping around. That's what we kind of got there, right? MSTR. So I'm a big fan of MSTR, the stock, right? You know that they've rebranded to Strategy. I'm telling you now, they're probably, we've talked about this on Beards and Bitcoin before. They're probably going to become a bank at some point in the future. So, this branding to Strategy with the B logo, the Bitcoin logo there at the end, probably like a, there's a name for it in marketing. I can't really remember what it's called. It's like some sort of transition branding. So transitioning from MicroStrategy to Strategy Bank, right? What they're doing right now is probably what it is. If you ever wondered what's, Saylor going to do with all that damn Bitcoin in MicroStrategy, well, there you go. Again, we've delved into this really deep on Beards and Bitcoin on Wednesday. So if you guys haven't watched that, be sure you check that out. You can see it here on YouTube, youtube.com/Texas West Capital. And on that first page, it comes up. We've got the Beards and Bitcoin podcast up there at the top, I believe, or right around that. And you should watch some of it. It's so much great information. The other guys on there, Andrew and Tillman, they just really round it out. They bring so much information from TradFi and mining worlds and finance worlds and stuff like that. So, but anyway, yes, gotta be humble, Scott. I'm going to tell you right now, as much as I know about trading and as well as I've done, I don't know everything there is to know about it. I don't. And understanding that is what keeps me going every day to learn more. The minute you think you know everything there is to know about something is the minute you start falling behind. You're going to get left behind. I promise you. Now, so MicroStrategy is what I've been talking about since we had this pullback in this triangle formation here. Again, looking at potentially being done here. What we need is we need a breakout above 437.61 to add confidence to this count. And that gives us then this minimum expected target up here at about $810, $810.5 based on the height here. But that can always overextend much higher. But I'm not hating MicroStrategy at the moment. They just had their earnings out Wednesday, as you can see. Not good here, but it has to do with their with the accounting for their Bitcoin. That's why their miss especially looks so bad there. But it'll look different going forward now with the FASB rule change, the accounting change. So now they can account for it differently in their books, and so it should look different going forward. But all that gave them was kind of this dip back. And then here we are bouncing up today. So here we just want to see a breakout here. And then the next swing high here at 404.5 or so. Then 43, and getting above 437.61 is going to set us off to $800 plus there on MicroStrategy. So I still like that. Gold's one we've been talking about for a while. We're talking about this triangle here, and of course we got the breakout. Wave 3 is likely still in progress here toward 29.35 and 20 cents, because that would be the minimum expected target here in wave 3 there. And then wave 5 of 5, or this might even just be wave 5 of 3 rather than 5. I'll have to go back and check it, but should be pretty close to that 3,000 area. So right now I got it at 27.90. 29.75, but it's probably a little bit closer to 3,000 at this point. So gold continues to look good there, but as long as we push this up there a bit further, we're going to get a pullback, right? So if we can get up to this 29.35.20 area, then our wave 4 pullback here is going to be at least 28.5680, or maybe even 28.3280. So it's the 38.2 or the 50% pullback, which is how wave 4s work. So what we look for, and then of course, we have the move up. And so if we can get that target and we pull back there, then yeah, 29.8550. We're getting pretty close up there to that 3,000 mark as far as gold goes here. And like I said, it may not actually be wave 5, it may be 3 of 5, but still that wave 4 is going to be a big pullback off that 3,000 mark, if we can get that rejection there. Okay. So precious metals not looking terrible. PLTR, man, this has been one. God, we did so well from way down here, all the way up, and then we took profit. This is another trade just taken. As you can see, we actually gapped up through it, so we were able to get at a higher rate there. If I'm looking at this, 1, 2, 3, 4, 5, we're pretty close to that minimum expected wave 3. So we're probably looking for a pullback here. Let me see here. So PLTR on that pullback, if we've topped out here, which it looks like we may have, maybe we'll need to get some pullback, but that would get us, that would get us a wave 4, 38.2 right here, dipping just barely into this gap here. And then that would have us pushing out higher. 130.10 would be that 5 of 3 target. And then we'd have the larger wave 4 pullback, and then we'd have wave 5 up. So, you know, it still looks like further upside for stocks. It still looks like further upside for Bitcoin and alts. You know, we just need to get that movement up through it, right? We just need to get this little bit of push up. And like I said, if we're getting through this area, we should be looking for a breakout, not a fake out, not a breakdown, right? So we should be looking at there. Now let me see here. Let's see here. Got some questions in here. Let me see here. Chris, I looked today at Link USDT and made myself a Wyckoff count. To me, it looks like a reaccumulation. The 4-hour gives a nice picture of the range, and Monday low looks like a spring, which has the highest volume. I think you're right on that. Let me pull up my chart here. I think that's the one I want to see. If you guys haven't hit the thumbs up or the like or left a comment, shared the link, I would really appreciate it if you could do so. Thank you so much. That would be a huge help. What the heck's going on? Why is Zach on here? That ain't cool. Son of a biscuit. All right, well, I'm going to have to draw this chart in here, guys. Oh, wait, no, it's already in there. Oh. All right. A bit further on that pullback. Let's kind of see what we're doing here. So we got basically just around a 50% pullback, which is what we would expect. I think you're talking about this range right here, Bamboo, right? Something like this. And you said this is the spring right here. So you get your selling climax. We do have a spike of volume, nice lower wick. So again, selling climax, automatic rally secondary test, pop up enter phase B, comes down, then we get this spring here. Now that spring is 9.03 million on the volume. The selling climax is 3.04 million. So basically 3 times as much volume on this spring than on the selling climax, which means this is a test. So we should see a higher low print on much less volume than this 9.03 million. And if the pullback is complete here, I mean, we're significantly less. We're 1.89 million. So it'd be a successful test. Let me see here. Yeah, so anyway, yeah, I mean, I think you're right there. Yeah, it looks like a double. There we go. A double zigzag on the correction here, the complex correction, WXY. So ABC and ABC. A, B, C, A, B, C here. So what does that mean? That means from a grand scheme of things, the big picture here, breaking out above wave X at $27.20 is going to add confidence to the count. That gives us a pattern target based on the height of this pullback of $46.05. But again, could go higher, right? You can look, if you don't want to look at it this way, you can look actually at it this way as well if you're more comfortable looking at this. And what you have is a descending channel here. This is a throw under, which usually indicates the end of that trend, especially with the large volume, the large lower wick there, the dip below and close it back up there. So looking for this thing to push back up higher now and break up and head up there, at least at $46. We had this great, those of you that were following me back here at least in May of 23, You'll remember we talked about this likely breaking down and printing a spring here. We were already talking about this by the price action and volume here being accumulation. And I said, if you can get it around $5 on the spring, buy it. Spring dip to where? $4.92.5 basically. So, obviously we've had a great run since then, pushing out. We had our jump across the creek here, show of strength up here, back up to the edge of the creek. And we're rallying up higher here again to go up. But it's been a really great trade. This and the Sol trade has been really, really good. Solid, $9 and some change, riding that up. So, Josh, man, have a great day, bud. Have a great weekend. What's your account showing for Sol? A large contingent seems to think the run to 295 was a blow off top. Yeah, the large contingent's wrong. I believe they're wrong. Again, I can't guarantee you I'm going to be correct, but I believe they're wrong. Let me see here. Sol. Well, wait, we'll see if it shows. Oh, here we go. Okay. Yeah, so again, Sol was that great buy when we talked about it down here, $9 and change. It's just been absolutely amazing run here. What do we have here? Well, what's this pullback? It's already 50% pull. This is probably like a 1, 2, 3, 4, and a 5 here. So probably wave 1 of 5. Wave 2 here. This again being 1, 2, 1, 2, 3, 4, 5 here. Well, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Yeah. 4, then 5 there. Yeah, so if I'm looking at it, again, you have this descending kind of wedge thing going here. We have the breakout, the retest, the pop-up higher pullback. Basically, another retest that's low here. What you did is you pulled back into, what is this, the daily? Yeah. This daily green demand structure. Right there to the EQ. Perfect rally back up there, right just prior to the S1. If you're getting a daily candle close, especially impulsive breakout and close above the daily pivot here at about 233, should be heading up higher. If that's a 1 and a 2, a 5, 3 is up here around 433, and 5 is up here around 536. And again, that's without a blow off top or anything like that. This little movement here is not a blow off top, guys. That was 6 days. That was 6 days moving up. Ultimately, just about 12% above the previous swing high. It's not a blow off top. I think people get too hung up into their small local time frames, and that's where they end up getting screwed. So let me throw this in here real quick. Yeah, so I would say we probably got a 536 target at least going on here. Remember, we had sideways here. Even if we just look at, you got to look over here actually, because we didn't actually stay out of it. So even at this point, with this whole range, this little breakout here, we're 326 days, guys, almost a year sideways. The longer you go sideways, the stronger and further you break out. Okay. Again, I think we've got good upside still on it. Even if you just looked at, say, this right here as this kind of descending move here, you were still sideways for 233 days. You're not going sideways for 233 days at you know, $100 to $200 range just to go up 62%. No, it's going to go up higher, or it should go up higher. But again, you just want a daily candle breakout and close above this 233 area to signal that that's likely what's going to happen there. And then you'll be looking up there, 434 or so minimally for that wave 3. Does that make sense? So yeah, the herd seems very confident that Sol is done for the cycle. You know, again, I can't promise you that I'm going to be 100% correct. I'm not 100% correct, which is why, you know, at the Academy, I don't ever erase charts. It's imperative to me that if you're learning to be a trader, that you understand that you're going to get it wrong a lot of times. And, you know, the better you get, you know, the more you practice, the more you do it, the less you're going to be wrong, but you're still going to be wrong. I've been doing this for almost 31 years, or I'm in my 31st year here, or running up to my 31st year, I guess. Yeah. You know, and I still get things wrong, but that just helps me also, you know, signal out the importance of proper risk management and to get you guys to actually take it seriously. As I said back at the beginning, trading is a game of losing, and he who loses best wins. Okay. You're going to see different versions of that quote from professional traders for the last 30 years, at least. Okay. Because it's true. And it isn't until you actually recognize that you're on your way to potentially being successful as a trader. But I can guarantee you, if you don't ever understand that, if you don't ever really recognize it, understand it, and, you know, get it figured out, you won't be successful as a trader. You might have a win here or there along the way, and sometimes you might get a streak of wins. But overall, your equity account, your capital account is not going to look like that. It's going to look like this overall, because you have to get it figured out. You have to understand that, you know, the odds are against you in the markets. But if you can get your risk management down so that you lose very little, and you start figuring out where you can get out as quickly as possible, but still not before it actually figures it out, right? You want to figure out, where can I put my stop loss, where it most likely that's the, you know, the area at which I can say, you know what, I'm probably wrong. And then lose as little as possible with that. And then when you win, because as you've seen, you guys, I'm sure, even if you're consistently losing over time, I'm sure you've had a couple of really good trades, right? Where you've made a lot of money. You've made a lot of return on that. So the goal is fix the other side of it before you do anything else. Make sure that when you're losing just a little bit. That way you live to play another day. And that is so important. That is one of the biggest harbingers to your success as a new trader. Because until you get it figured out how to trade consistently and profitably, right, you're going to be losing money. So if you can't find a way to stop that bleeding, you'll never be able to stay in long enough and practice long enough and learn enough so that you can start making money consistently. You're going to be out. And that's what usually happens to traders. That's why they're usually out so quickly. All right. Ryan Metner says, love my show. Man, I love having you here. Thank you. You know, I really do, guys. I appreciate you all showing up, because I'm not like everybody else. You guys have seen, I don't tell you what you want to hear. I sit here and I keep on, you know, to probably your annoyance, I continue to talk about the virtues of risk management, proper risk management, and how it's the most important thing you're doing. Right? I tell you to focus on your risk, not your profits. Everybody else is trying to get you to focus on profits because it's easy to get you to do what they want you to do. They want you to buy a course. Guess how easy it is if I say, listen, if you're doing this, here's your profits. Here's how much money you're going to make, blah, blah, blah. But what was I talking about at the beginning of the show, right? They have their responsibility in approaching you that way and lying to you, right? But you have your responsibility in making those decisions to believe them. Making decisions that get you to the point where you're going to believe them and the nonsense that they spew. So, you know, again, obviously would love to have you all come in at texaswestcapital.com and join us there. But even if you don't, I hope the time that you're spending here is at least getting you to learn some stuff that'll help you as traders. Nothing I talk about in here is, you know, when it comes to trading, is tongue in cheek. I'm very serious about trading. I like to have fun. I like to have a good time. I try not to be too boring. But when I talk about these things about trading, especially on the mental and the psychological side of it, these are legit things, guys. And for those of you that don't know, I do happen to have a master's in applied economic psychology. Say that 3 times real quick, right? And I've got 30 years of experience. So I understand what I'm talking about when it comes to emotions and psychology, and not just because somebody else said it online and I'm parroting it, right? I've got real world experience with this stuff as well as an educational background in it. Andrew says flex. Now, if I was flexing, then I'd say, you know what, listen, I've also got a master's in Homeland Security with a focus on governmental decision making. I've also got a law degree with a focus on emerging technology, corporate law, and tax law. I'd also bring up those things, right? It's funny, they all actually kind of really, though, converge in this area of digital assets, which I love, you know, because, you know, just everybody looks and they go, well, what the hell did you learn all that stuff for? How does that all even make sense? But, you know, specifically for trading, having that educational background, that understanding in methodology when it comes to psychology and stuff really does help a lot. Especially when I can apply it to my now 30 years of experience in doing that. So let me see here. So yeah, you know, again, we are where we are. The goal is to kind of zoom out a bit. The goal is not to get stuck in your 15-minute, 5-minute time frame and complain about how miserable you are over the last day or the last week. It's to zoom out further and go, okay, did I make some mistakes in my buying or selling? Where did I make those mistakes? What caused me to make those mistakes? But until you admit that you made the mistakes, you can't go back and change anything, guys. And so you have to take responsibility for that. Because otherwise, nothing else I'm telling you here is going to make a damn bit of difference for you. I hate to say it, but it's not. Because you're not getting to the root of the issue, right? Whoops. I'm about to go out of here, but listen, man. What is this? Bitcoin here. We could be complete on the pullback here. 65%, almost 70.5. Just pull back to the pivot, descending resistance here. Trying to rally back off. Let's look for a breakout above this swing high right here. 99, 249 and 42 cents on this chart. If we can get that, we're probably going to break out higher. Daily close above this morning's swing high here at 100, 184 and 13 cents is going to be pretty significant to the idea that that low is in and we're going to break out higher. And then we need a breakout above this swing high here at 106, 466.54. This is over here on January 30th, that swing high. And if we're doing that, you know, again, each one of these sets up more likelihood of breaking out to new all-time highs. And then we head up there toward those, you know, those targets I mentioned, which I don't see on here at the moment, but they're doing a different time frame. Oh yeah, there it is. Close up to around 126, 395 and 136, 447. Before we get a bigger pullback, maybe back down here toward this basing that we're doing here. Before then breaking up higher once more. All right. Can the devs pump our coins? Probably not. But just start, you know, at the lower time frames here. I've given you on the different time frames the things you want to look for. Just watch that those things are happening. And the more of those things that are happening, the much stronger the likelihood is we're going to hit those all-time highs. So right now, based on the structure and everything right now, I think the low is in. I think we break out higher. I think, you know, the wave 4 swing low there was a spring. We came back deeper than what we normally do, but it's still valid. You know, we're printing a higher low potentially here. And again, we had all that volume coming in on that swing low as well. So again, demand showing up here, but then demand really showing up here. So we're just looking for that rally to break out higher above that, that daily candle, right? That we talked about. This controlling candle right here. We want that breakout above that. So there it is. Again, guys, you can join us, TexasWestCapital.com. You can still get in for $97 a month right now. Cancel whenever you like. That's fine. You'll get grandfathered in when the price goes up here pretty soon. You'll be able to stay in at that $97 while you continue to renew, as long as you continue to renew. But, even if you don't, I'll be back next Friday. I think Fibbo is going to be able to be with me next Friday. So I'll let you guys know as I know more, probably sometime next week. But generally speaking, Fibbo tries to be with me every other week, every other Friday, unless corporate stuff happens or he's got personal stuff come up where he can't make it. But, as always, love to have him there. By the way, if you do the $97 a month, you also get access to his threshold theory as well. Our TWC Traders Club, and, of course, all this. If you like what I talk about here, think of that on steroids for what you can learn with the rest of that group coaching there that I teach. And, you got a legit chance to not just, have somebody's system that may or may not work at some point, but you get a real understanding of how to, of how and why markets move the way they do, how to read them, how to forecast, and you can apply that to any strategy or any system out there and make it infinitely better, that knowledge that you're going to have. So, all right, guys. Yeah, no kid, man. We do have lots of educational, lots of hours of education in there for sure. I don't know that we have thousands of hours, but we definitely have well more than 500 or 600 hours. We got a lot. Hey, thank you guys so much for joining in. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I wish you all the best. Again, whether you join us or not, I hope you continue to come back here and pick up bits and pieces along the way, because it's at least going to help you out, to some extent, right? All right, guys. I appreciate it. Oh, man, Bernardo, man, I hope so. I appreciate you guys being a part of it and doing that thing. It makes it fun for what I do, right? All right, y'all take care. Have a great weekend. I will see you next week. Goodbye, everybody.